recording. Okay, so the recording started. I'm going to hop in and go over some questions. And so we'll go over this quick example first here on gold, which was, I believe, in here. So with the narrative of gold going higher, I'll talk about these projections slightly. That will be later on in the course for an add-on, but let's kind of rewind it here and we'll talk about it. So when we close over this series of down close candles here, that is when this is our invalidation, right? So if price is going to continue higher, because we are trading expansion, we don't want to see down close candles get disrespected. So when we reach into here, I want to see price go and close over here, which is why I marked it out. And then we will have a new invalidation. Now with here, we do have a candle to closure, right? And so this is where most people's questions lied today, is we have this candle to closure, so we can be looking for candle 3 to expand higher. So then dropping down to the 5-minute here, do we have a change in the state of delivery? We do, right? Right there. And then, so on the open of the next candle, you could potentially just enter here, right? I don't really trust this low, right? I like to see a little bit more of a mitigation of that, but that is a sweep of a low, and then we close over. So mechanically, according to the model, I could be looking for an entry right here. I stop there, and then 2R, like that, right? So you can see we don't really get that and displacement out of there, which is not what I like to see, and it fails, right? So that was kind of one example I wanted to go over, but then there's a few questions on, let's explain this, and let me number them out real quick. 1, 2, 3. So we're anticipating this to be a candle 3, right? But with the way it's looking right now, it's not looking like it's going to be a candle 3. However, this swing formation, based off this higher time frame level, is still valid unless this low is taken, right? That's kind of what we're trying to trade. So as we get into this candle closure here, you'll notice we don't close very great here, right? So you can see we're forming a candle 2 in the other direction. So I'm trying to explain this slow. Let me know if it's confusing or not when I go check the comments. But now we're forming a swing in the other direction. So it's ideally going to take this low, right? Because 1, 2 swings lower. But if we're bullish on the higher time frames, which we were, and we want this low to remain, well then this low is kind of the target to move the other direction, right? Now what I was saying with where this low should be placed, that's where you can use the 0.5 of this candle 2 wick. And so if we're going to form a low, we'll sweep this out, remain up here, right? So you can see, and you can see this candle 3 failed here because we never went and made a change in the state of delivery within this candle, which I'm working on that section of the course. But you can see right here, when we reach into this level here, this is kind of our last chance for forming a low with this low remaining intact, right? If we don't form it right here, this is going to fail, and then we'll have to form another swing point to go take highs out, right? So that is what gives the context to this candle 2 closure making any sort of sense because of its location close to this invalidation, right? Normally, we don't want to see that, right? We don't want to see it retrace that much. But in this case where we have a, let's see if I can move them all. I don't really know how to. I'll just drag them all back. In this case where we have a candle or a swing opposing, right? I want to see this low taken out. Now the question here was, let me get rid of all these. So that's what makes that little swing point make sense. But the real question here was, how can you have multiple different candles? Because now, if this swing point remains, it's still a candle 2. So 1, 2, 3, this is still technically the 4th candle in this swing point. However, we now are having another sweep, so this can also be labeled, let's see, as candle 1 here, candle 2 here, and then a possible candle 3, right? And so generally, when this scenario comes up, it's better for most, if you don't have a complete understanding of the model, just to use this new candle 2 and then wait for candle 3 off of that, right? However, if you are confident in this low holding, you can look for swing points in this candle 2, which is actually a candle 4, right? Or anticipation. So then we get this move higher, right? And you can see we don't really return back to this order block, but this is now a new candle 2, right? So then with that idea in mind, if we're going to get a continuation, because this is now, sorry, the drawings keep moving. 1, 2, 3. Where do we want to see that from? The upper half of this. And that's where we get this little wick here. And so there's a few questions on this not being the opposing candles. And if you look at a wick on a lower time frame, we're trading the wick on a higher time frame, right? So this hourly wick, that's going to be a series of opposing candles, right? So when you see a wick on a lower time frame here, if we go lower, that's going to be a series of opposing candles, or just opposing candles. Let's see, TradeView is a little weird with it, but right there, right? So that's our 5-minute wick. But even if you miss that, that's fine, right? But you can see what happens is we go take out those highs, right? So that's where we get the retracement. Where do we actually get the change in the state of delivery? On the 1 minute or the 5 minute, right there, right? So then that validates this low to continue higher. So I know that's like a little bit confusing there, because this candle is candle 3 for this larger swing, but it's also a candle 1 for this swing that's forming in here, right? And so that's just kind of what happens, where you form a swing in the other direction, but since the higher time frame is up, it's not going to go take this low out in this case. And so then we form a swing low in here. Hopefully that made a little bit of sense. I'm going to check the live stream chat. Let's see. Hopefully that made sense. That's kind of what I wanted to cover. Kind of just to review it is, for most, if you don't have a very good understanding of blending these timeframes together, it's better off to just not look for an entry in here and just seek the continuation following. So let's see if that made sense. Supply and demand. I never studied supply and demand, so I can't relate to it, or kind of relate it to what I trade. Let's go through a few more questions. I think that answered that one. That's the exact same question. I think that's the same one. Yep. So it's kind of both. How do I get so much stuff done, still have time for beach rest? I kind of block my time out, so I use a Google Calendar. And like, for example, this stream right now, I have it blocked out on my calendar each week, because it repeats at the same time every week, and same with like trading, stuff like that. So I just block all my time out, and then during the times that I have blocked out, that's exactly what I do. I do the work. I just focus on one thing, and then that is all I do. And then it gives me free time. How do I get my hourly dividers? So that is actually this indicator here. So this is a pro version. If you check my TT lessons channel, I have pinned a few free ones, but this one, putting on the open close time, is also what puts that there. So whatever I have up for here, it will put the vertical lines there for me. And I actually just talked to 2 Degrees, and he's putting a little TTRADE box in here that's gonna mark out the wicks and the EQ of these larger time frame candles, so I don't have to keep readjusting these. Okay, back to questions. Do you still draw phases of price on your chart? Expansion, consolidation, retracement, reversal. How are they useful to me? So I personally don't, and I'll kind of explain that here. We'll go out to the hourly, and we'll use the daily here for gold, right? And I'll explain why I don't really mark them out. I do use them on the daily chart, and I can explain that. But in terms of my model, what we are trading is the power of 3, right? That's all a swing formation is. So this trade in here, all that is doing is realizing that the lower part of this, or from here to there, that's accumulation. So looking at it on this chart, there's the accumulation, right? This wick right here, or this move below the low, that's our manipulation, right? And then the candle 3, or in this case, candle 4 here, that's our distribution, right? So everything after this, that's our distribution higher. So the whole thing with the phases of price delivery is it's kind of built into my model, so you don't have to think about it. Now where I do focus and use it is, I don't want to remove all the drawings yet because we can talk about a lesson in there. Now where I do use it is on the daily chart, right? So I think a good example here is, I'm not going to type that in, I'm just going to go over to oil here. So oil here, for example, right, on daily, why have I not really been interested in it? And that is because of the phases of price, right? So you can see the model formed here, right? Get a straight line, right? Because we have candle 1, candle 2, candle 3 expansion, candle 4. Why am I not interested in here? Well, because it's also built into the model with only focusing on day 3 and day 4, I'm not going to get caught into that 3 days of expansion, right? So when we have 3 days of expansion, right, can get some consolidation, retracement, or reversal. And so what I'm doing is I'm not going to trade after that. So I may miss some moves, right? So if we get more than 3 days of expansion, so like here, for example, day 3, day 4, I miss a big day 5 if I'm not holding a position. And that you will miss moves like that, but you will also save yourself from, you know, here's our day 3, day 4, you know, if you're not holding, but you save yourself from some consolidation after 3 days of expansion. Don't know any great examples right here, but I'm looking for a new phase of price, right? So unless we form a reversal here, or we get some sort of retracement where then I can, you know, form another swing point, it just keeps me out of that. So they're all kind of built into my model. However, I will focus on the daily chart, right? So if I have 3 days of expansion, you know, I'm looking for retracement, reversal. Like I'm not looking for expansion, consolidation, expansion. If I have consolidation, I'll look for that manipulation to form a swing high and then go lower. Hopefully that makes sense. Noticed examples that swing formations pairs with extremes of broadening formations are the one that gives more R. And yeah, that makes sense because, you know, if you're trading a consolidation, right? Let's see here. If we're trading a consolidation, we know our focus is on the manipulation, right? So if I'm focused on swing points on this side of the range, then I can trade it to the other side of the range, right? And that's going to give better risk to reward, almost, you know, with ES or NQ here, right? If I'm trading a swing point at the high of this range here, right, with that SMT, if I'm trading a swing point up here, I'm going to get more R because, one, I'm aligned with the higher time frame, but also trading to the other side of the range versus trying to trade this little swing point here, right? Let me get back to the questions. Are there occasions you'll enter when there's not a perfect swing formation? I think gold is a good example of, you know, still looking for trades when it's not perfect. You know, generally I like to see like a nice, I think silver actually did it. Yeah, so normally I like to see on my reversals is like a very nice V shape, right? So we run out a low, we have a nice V shape. And that's what I like to see on my reversals. That's just the structure I like to look for. And if you notice on gold here, we did have the SMT, which clarified things. But normally I would have liked to seen this kind of just get immediately taken back up, right? Instead of this here. But this was just to form an SMT. And then we get the V shape back up, right? So if you almost just ignore this, you have that V shape. But when we don't have a perfect swing point, right, I just follow the rules set out within my model. So, you know, let's see here, hiding the drawings. This was a decent swing point, but it lacked the lower time frame structure that I want. So I let this day pass and then I can still trade this day, right? Although this isn't like that perfect or ideal swing formation versus something like, you know, if we go to the weekly on ES, what I talked about at the beginning of the week, or NQ, where we have that ideal formation, right? And that is why, you know, being bearish this week on the indices made sense. Like this is, you know, if you went through that my model, that's your perfect reversal, right? So being bearish for this week, being bearish for this week. Now if we get a strong close in the lows here, I'm not really interested. Why? Because that's 3, 4. If we get a fifth, I'm staying out of that because that's more of where I can get caught in some consolidation. I'd rather wait for, you know, a retracement to reshort or get a reversal to long it, you know. Once again, that's having the phases of price built into the model. Let's see. Talk about mitigation blocks, advanced market structure, SMT. So that's all, once again, kind of built back into the model. So we'll go to gold here on the hour. And so what I realized is I do use advanced market structure. And all that is when I'm talking about looking for a sweep and then that change in the state of delivery, right? That's, you're looking for that intermediate term low. But the model just simplifies it, right? I don't need to explicitly look for that. And when I get my next 2 sections of the course done, should be done before the weekend, that will make it a lot more sense. As for mitigation blocks, it's just really not that necessary. You know, you could use it as a confluence here. So here you have, you know, this old order block here. So using that as like a little mitigation block because one made the new low, order block fails, right? And you can also see when it's retested here, it's just kind of like a little flip zone. You could use those, right? But really, it's not needed with my model. It would just add more analysis paralysis, right? Like it's just not needed. So I refined those out of my strategy in the last year. And then SMT. I really do like to look for SMT on the low to pair it with, or within that time, or within the intra-candle change in the state of delivery, right? So within this candle here, if we have a SMT in here, so for instance, let's say I don't want to see this low taken, and we see silver makes the low there, that's just more confluence to my upside. So I will use SMT. However, I think a lot of people go wrong where they're looking for SMT to frame an entire idea. So for instance, live time, you know, when we went and took this high here, we had a little SMT with silver here, right? And people will try to frame an idea off of that. The reason I kind of leave it out of my model right now, I'm going to make a section on it eventually, is because it's important to understand that you want to frame the trade first and then use SMT as a confirmation tool. You're not trying to frame trades off of SMT. And that's where I think people go wrong. And that's one of the reasons I left it out initially, because I want people to focus on actually building a framework and a model and then looking to confirm it with SMT. Let me go back to questions real quick. Let's see. SMT on gold, I'll use silver, so SI1 exclamation. And then let me go back through these. I missed quite a few. Can you go over framing more 15 to 1 or 1 to 5 using your fractal model? Yeah, so we can, you know, even just hop into an example in here somewhere. So for instance, I mean, that one, it works out, but it's not a perfect. Actually, we'll go over this one because it's not perfect, and it's good to go over. So for instance, this is something where I will consider taking it even though it's not directly defined within the model. And that is because of the narrative, right? So you can see here, what do we notice here? We sweep out all of these lows, right? Sweep out all these lows, rebalance this imbalance here, reaching back into opposing candles, right? Now you can see we don't close back inside here, right? And that would be a candle 2 closure if we did, right? So technically waiting for a candle 3. Now this is where I would consider looking on the lower time frame for a change in the state of delivery and still trading this candle 3 because I have the narrative, right? you can go studying that on your own if you want, but I don't want to confuse people, so we will leave it. But if someone has an example, possibly we can look at it. We can just do that. Or we can just hop down to any random one. So for instance here, form a swing point. This is a candle 2 closure. We'll drop down with the M1. See what the lower time, wow, that looks absolutely horrendous with volume, but anyways, we have a candle 2 closure, right? We sweep out a low, so that's our point of interest. One we're with the trend too, but candle 2 closure. So with a candle 2 closure, I want to mark out 0.5 of this wick and look for price to be supported there. Now I want to pair this with a change in the state of delivery because that confirms a swing. If we don't have this, then there is no setup. Now another thing you can add on, I've talked about this, is you can also use the 0.5 of this series of down close candles here, right? So the mean threshold or just 0.5 of the opposing candles. So ideally, I can kind of refine this zone where I want price to be supported in 0.5 here and I also want it to be in here. So really looking for somewhere in here to form a low within this next candle, right? So as we go into the next candle, I can look for a swing low to be formed in this area. Let's see if it loads, right? There's no closures. So here's a possible swing low. Now, what I would do is if we're going to form a swing low in here, I want to see if we change the state of delivery here, right? Because the swing low is the first opportunity, but the low is not confirmed, right? Once we close over here, that's when we validate the low, as I showed on the gold hourly chart. Now, since we made a new low, this would be the change in the state of delivery. Can we close over it? Not yet. So far, nothing right there, right? So this is the first possible entry here because we have a intra-candle change in the state of delivery here, right? I'm not a huge fan of it just because it's kind of consolidation here. The similar reason why I wasn't a big fan of the consolidation on NQ, but I can either take an entry on here with my stop there, looking for a minimum of 2R, right? Or I can also be looking for a retest. So either or, you know, we'll just see if we get a retest or get lost or get left, right? And so you can see the market entry would have worked out, but that's just kind of the example of really any swing point you can just go through. You can see how it respected the 0.5 in there, right? I'm not trying to pick a low in here, right? So I'll talk about that and that will be released this week, but just kind of a random example there. I don't like to use the 5 minute as a higher time frame. I find when people use those super lower time frames, they're gonna lose track of what's actually going on. So like for example, say we're on the 5 minute here on gold, you know, and we find some swing high or something, you know, like let's see here. Oh, here we swept this high, we close below here. That's a change in the state of delivery, and then it just gets railed, right? Why is that? Well, you're just completely losing sight of the higher time frames, right? So personally, not something I do, and that's why I did not even talk about it in the course section. Today NQ chart. There's not a whole lot to go over for me on today with NQ. We can talk about it, but mainly it's just a continuation of yesterday's reversal. I wasn't really a big fan of yesterday's reversal on the hourly here, just because it's more consolidation, right? Like I said, I like that V shape. That's just choppy in there. So that's why I was talking about using the 4 hour today. We have that change in the state of delivery and then gap down and we just continue to drop. For me, there's nothing really here intraday unless I'm on side here. I find this is just, when I was checking the charts, I was down here because I didn't wake up for London today. But to me, that's just chasing, and I'd rather let something go than, you know, do that. Like I'd rather just follow my model. So that's my perspective. However, if I did really want to get on side, what would I do? Obvious trend down with the weekly profile, right, and the higher time frames. I had a question about retesting this, and I would not want this retested, right? So they were saying, well, if we take this low, we can retest that and go lower. And what I don't like is if we're going to get a continuation lower, I don't like to see large retracements, because if we go down and then back up, what is that? That's that V-shape reversal. So expansion met with expansion is a reversal, right? Versus expansion retracement, right? So I was saying this morning, this is more so just the change in the state of delivery for this trend, right? I don't want to see when we gap down in here, I don't want to see us go retrace all the way in there, because if we do, then now we are just, it's more likely to go reach for this high or just consolidate. So kind of off topic there, but once we have this trend like this, right, there's a few things I can do. I can either look for hourly swing highs or 15-minute swing highs. But let's say we're in here and we have an hourly swing high right in here. You know, if this is paired with a change in the state of delivery on the 5-minute time frame, right? Let's see, let's go here. We'll use the 5. If this is paired with a 5-minute change in the state of delivery, then that's that fractal model in line with the higher time frame. Right, so you can see candle 2 closure, right? Not a huge fan of it just because this is a larger series of up close candles, but if you were just using that, could do that. And then it would need to respect 0.5 of this wick. And like you can see, very choppy in here. Honestly, if I was going to be taking an entry, I would be taking something like this. And the reason for that being is this retrace a little too high for my liking for a continuation in this next candle. So then I would be waiting for, once again, a change in the state of delivery in this candle, which we get in candle 4. So then taking the open, and then I could refine my stop loss from here to this opposing candle, because if we come back up above there, it's not really likely to work out. So you can really just go look for 15-minute swings as well. You just need a higher time frame trend, right? So if we look at swings here, how many of these worked out? Swing, 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 right? So if we are trending down, I will look for 15-minute swing points. So you can see, when did we form another swing? There's a swing. Technically, this is a swing as well. That's the open, so you wouldn't really get in on this candle. It would be the 9:45 candle. So that's my opinions on NQ for today. A common mistake I see people making. So with the model, the most common mistake I see is people looking for stuff without the higher time frame candle closure. So it would be like, you know, someone's sitting here on the 5-minute chart and they're like, is this valid right here? And I go, well, I don't know, because I can't see the higher time frames. Or, oh, I'm looking for a reversal to the upside right here because we have a change in the state of delivery. And I go, oh, what does the candle closure look like, right? So you got to wait for the closures before you look at the lower time frames, right? It's the same thing for, you know, the gold example or anything like that. I'm not looking at the hourly chart here until I see this closure here, right? Once this candle closes like that, then I look to the lower time frames. So I think the biggest mistake I see people make is they're trying to use the lower time frames before they actually wait for the candle closure. Yeah, okay, let me get back to some of these live stream questions from earlier. Still, okay. Backtest using H1 M5 fractal model. It could be any SS you want. Maybe we'll set up a backtesting session, and we can do that. The only thing is I do want to answer most people's questions so they get the value out of that. But in terms of higher time frame analysis, my favorite is to use the daily chart and then the hour, right? So if we'll just use gold because, you know, that's the one that was moving there to the upside. On the hourly, any hourly swing low or opposing candle will provide opportunities to the upside for the 5-minute, right? So after we form this low a day, right, I'm anticipating this low to form, right? Or even when we close over here. So this retracement, possible M5 setup long, right? Even this is a possible M5 setup long. We can go look in there and see if it was even valid or if it would have just failed. Let's see here. Sorry, the Wi-Fi is slightly slow. So the change in state of delivery is actually in here for this time frame. I would use that, but we can mark out there or just this higher series. We technically do get it, right? Technically do get it. So marking out 0.5 here of this wick. I'd want to see what? I'd want to see a swing low form, so possibly could there. That would be your first, higher risk entry. But I'd want to see if we close over this series of down close candles, right? And do we? No, we don't, right? And that's not a good closure for continued upside. But what I mean is, when I have a bias to the upside, I'm looking for opposing candles and swing lows to form on the hourly, and then that gives me a point of interest for my 5-minute setups, right? So possibly in here, because we're reaching back into this opposing candle, right here, because we have a fair value gap, and we just went through that one, was not a proper setup. Right here, we have this little swing low, but I can tell by this candle closure, didn't get a little change in state delivery there. Right here, we went over that example. Another example here for this move higher. So 5-minute in there. Let's see if that gave one, which it did. 5-minute closes there. So then when we retrace into this candle, right, it's very messy, but there's your intra-candle change in state delivery for that continuation to the expansion. So the thing about backtesting is I could do it all day, but really what it comes down to is you doing it enough to recognize what makes sense to you. So if you don't know what candles 3 and 4 are, I would suggest going through my course first. But all it is in a swing point, there is going to be the high of the swing point, right? So we have that's always going to be candle 2. The candle before it is candle 1. Candle following it is 3, 4. Candle following that, candle 5. So that's what I mean. And so I just talked about oil in the daily there. But yeah, if you have questions about that when you wake up and watch it, let me know. Candle 4, can you give more examples of entries you've taken? So that is gold. Today is a candle 4. It's the same process as candle 3. I just prefer candle 3 because it's the earlier expansion. I just feel more comfortable trading right after the reversal than I do on that continuation a lot of times because I feel like I'm chasing. I don't always take the first entry that presents itself. I normally wait for that change in the state of delivery, right? Because with a swing point, right? So we can even just use this example here. Let's say I'm going to be looking to trade this to the downside, right? This swing point here. Don't really focus too much on the model, but just this. This would be the first possible entry, right? Because it's retesting 0.5 of this up close candle, made a candle 2 closure, right? So I could be looking to enter candle 3 with my stop there, right? Which, yeah, works out. But I won't always take that unless I'm very confident in this being the high or the low, right? I'm better off waiting for either the series of candles that made the high, right? So could use there as well, or just this. But once we get this closure here, then entering with my stop up there, right? Or if you use this, because on a slightly higher time frame, it would be this whole series. Could look for, a retest, or this swing point after this. It's a little more confident in that moving lower. Classic expansion. Well, it totally depends on how gold closes today. So for instance, if we go here and we take a look at gold, right? The thing I don't really like is the Monday low aspect of this. I do like the Monday low, but we'd have to close pretty strong for a continuation the next day. But like I said with my model, I'm only trading candle 3 and 4, so I'm not really interested in the following day on gold anyways. Let's see. So I don't know how to do that. How to stop questioning, hesitating on entries when the model is forming. Well, with that, it's mostly you just have to practice the model enough that you're very confident in it. Like you know exactly what you look for. because likely if you're hesitating, you just don't know exactly what you want, right? So, any psychology tips? It mostly just comes down to following your rules. If you follow all your rules and you have a mechanical or somewhat mechanical process, it's just following the rules, really. And then let me try to get to this question here. Let's see. A little confused on... Oh, I'm not even sharing this. Forgot I'm sharing not Discord, just my application this time. So let me see if I can pull this in here. You just go into here. All right, so let me reread the question. Gold. Drop to the lower time frame. I might have to have you rephrase your question a few more times, Z. But I'll just kind of explain it. Maybe it'll click. But I'm looking for what works out in terms of invalidation, risk to reward, all that, right? So, for example, on this, right? If I'm going to take my first entry here on the close, I need my stop on this low, right? If I take this entry here, right, or this entry in here, then I'm going to need my stop on this low, right? Because we closed over here. In expansion, can have my stop here. Let's say I take an entry here, then I need my stop here. Any of these really work. It just depends where your invalidation is going to be, right? Technically, I could have my stop on this low when I trade into there. Why? Well, we close over, validate, then we have another lower time frame reach into 50% of this, and then close over. So swing point in there. But with that, normally just like to have it on the actual invalidation. So maybe if you can rephrase your question a little more, I can help answer that better. I'm a little confused on exactly what you're asking there. All right, let me get back to the stream chat for a second. Name of the indicator. It's pinned in my TT lessons section. The one I use is a paid version. However, there are free alternatives that I put in there as well. If you want to build up a 50K funded account, I mean, it really just comes down to following a model and having a risk strategy. So I've made a couple videos on YouTube actually going over how to do that. So it's really just, you know, determining how many trades you want to lose in a row before you'd fail. So like if 10 or 15, so then take the entire drawdown amount divided by 10 or 15, and that's what my risk would be per trade. Do I use SMT in every trade? No, I do not. It's, like I said, a confluence. I get a little loss and proceed after an hourly change in the state of delivery. At what point do you look for candle 2 on the lower time frame you take? So let's kind of go back to gold here. So if you're saying on the hourly, so we're on the hourly here with gold, and I'll use the daily chart. The only time I'm looking for entries here is I want to wait for, we'll actually just replay this. So here we get a candle 2 closure, right? We'll just replay. We get a candle 2 closure here. The reason I'm not looking for entries yet on this is we don't have a change in the state of delivery. If we had a change in the state of delivery, then I'd be looking for entries within candle 3. Within candle 3, I would just be looking for an opposing candle to form. And what that does is, we can even use this example. If we have an opposing candle form, see, like this is not a very high probable day, or else this would have held. But when we have this opposing candle form here, all I'm trying to look for is, okay, within this candle, if we're going to get expansion, the wick has been formed, right? So all I was trying to do today on gold was, let me get back to when we actually close this, is, okay, we close over this. I don't want to see back into the lower half of this. Where's the lower half? Well, it would be below this low. We just closed over it into these opposing candles, and we just closed over here. So if this is going to work out, we don't go below this low, right? But what I want to see is we need to form a lower wick in this candle. So we need to go lower to then form that wick, right? So we go lower first. And then when we close over this, right? That is if an expansion. I'm anticipating this to hold now, right? Because opposing candles get respected during expansion. So now I'm anticipating this low to hold because I'm anticipating that to be the wick on the daily candle. So now from this point all the way until the end of the day, I'm anticipating that low to hold. So then if you go to where we're at now, right, it's held throughout that day because it's the lower wick on the daily candle. I'm not sure if that answered your question completely. But I can really take entries whenever on the hourly. If I'm trying to refine that down to the 5 minute, then I will focus on within kill zones. And then your question, do I only take entries after 8:30 or after 9:30? I will take them after 8:30. I'm fine with taking entries prior to New York Open. For SMT on gold, that is silver. I'm back testing. I was able to get a 50% win rate on monthly and weekly timeframes. But as I go lower, it gets more messy. I mean, if that's what works for you, that works for you. I think it's DRM or someone in the Forex chat. He's been trading it on the monthly to the daily to the hourly. There's quite a few people that just use the daily to the hourly. You really have to find what works best for you, and you can adjust the model. It's not like set in stone if you'd like to do it a different way. One shot, one kill on personal account on indices. I mean, I took gold, but indices, what was it? There's something last week. So within the model, you look to trade candle 3 and 4, and that's it. Yep, that is. If in the course, you'll see there's only that. Let me go back to the live stream questions. For entry signal, do you follow the same idea, candle 3, 4 entries only, or do you use any OB within the? Oh yeah, you can use any OB within. So you're okay. Wait, let's see. You're in the chat, so that works well. So I'm a little confused on your question, but I will do my best to get this answered. So you're saying, right in here, right? Do I need to enter on this because it's like candle 3 or 4, or can I still enter because like this would be 1, 2, 3, 4, 5. Like if 4 retests it, or I mean if 5 retests it, can I still enter? And yes, that is. I can, right? If I'm going to be taking a swing point entry, I prefer to enter prior to the expansion, right? But for in this case, right, when it closes over here, I can still enter here. I just need my stop there. Hopefully that answers your question. It doesn't need to be specifically a candle 3 or 4 within here, right? So, here's an example: 1, 2, 3, 4, 5, 6. Like I could enter on candle 6, but I still need my stop on this low down here. I think that's what you were meaning. Okay, perfect. Same with pyramiding. We'll just go into that same example here. Visual order, it's on the front. So like, let's say I'm in a position. Let's see. Yeah, we'll just say I'm in a position here. Right, my stop there. When we form a new invalidation here, I can technically trail my stop loss to here, right, which is above my my entry. So that means I'm either securing this profit, or if I add to the position and move my average price up to my new invalidation, that's how I prefer to pyramid, right? So I'm only going to add to my position when I don't add any risk. That eventually will be a section. It's just, if people try to worry about pyramiding positions before they're profitable with, just 2R, I think it's just going to be too much. Okay, let me get to the live stream chat again. Video course. No, I'm just adding 2 sections to the course. Most of the, like I'll add videos to the drive as well. I'm thinking about adding some stuff to the course video wise. I just don't really know how I would frame it to make it beneficial in a way. If you enter daily, hourly, one shot, one kill, how do you manage to trade? Generally I'll trail to opposing candles. So if I'm, daily, hourly, and then to M5, my risk is managed on an M5 setup. I'm going to trail to those M5 opposing candles, if that makes sense. What do you need to consider London reversal? So what I need for a London reversal, I don't know if there's any examples off the top of my head, so I'll just draw it, is I need us to retrace. So this is the open, right? Opening price. I want us to retrace, and then within 2 to 5, right? Sorry, this drawing is poor. Within 2 to 5, we form a change in the state of delivery, right? So this is the exact same as, we can even just use gold as not an amazing example, because Asia actually made that low, but we can use yesterday. This isn't like a great one, because the move up here, I would have preferred just the move like that. But between 2 to 5, we form a low, and we use that to change the state of delivery. So this is London forming this reversal, and then when we get a retracement in New York, it's bought up, right? But you can see this day is not really set to expand. If this would have been the same structure today, then this would have just been, London reversal, New York continuation. And why is that reaching into important level? Well, it's taking out this low. Like I said, don't really prefer it today. So let me just redraw today's gold chart for my ideal scenario of what would happen in terms of a London reversal forming. So you can see we have this closure here. And so then I'll mark out vertically just 2 to 5, so you can see. And we'll just get rid of these. So 2 to 5. So my ideal scenario would be, okay, I already explained why this low is an invalidation, and I like to mark out 0.5 of that. So ideally what happens is we kind of just sit around into 2 to 5, we retrace into this previous range, then we form a change in the state of delivery, and then that's our London reversal to really buy anything. When we get into New York, if we retrace into this previous range, that's a buy until we go and hit, our projections there, if that makes sense. So that's ideally what a London reversal looks like for me. You can see here it's slightly different because Asia did that, right? But you can see still kind of the same process. Can you give market analysis for the day before 8:30 a.m. EST on video? Likely won't be making a video every single day, and getting my mic out and stuff, because I am traveling, so that's why you see a lot of videos from my phone. But I do try to, when I wake up in the morning, give my analysis for each asset that has potential. So you can see yesterday, if we go into my analysis section, what I said on gold, I don't know why the photo wasn't there, but I said, you can see we closed nice in the highs of candle 3. So then the upper half of candle 3 will support candle 4 higher. I said, nice start to the idea here on gold, didn't get a CSD lower. If we're going to continue higher, we'll close around here. I'll be watching the upper half of today's range for that move to occur. So what I'm saying there is, if we're out on the daily, and we're here, I'm saying we respected this swing low here, right? Because if this is a candle 2, I still want to see this. It just didn't meet my requirements for entering on this day. Since we closed nice and bullish on this candle, right? This is a nice bullish candle. Then what I'm saying is I want to see 0.5 of this be respected for this continuation higher. That's when I refine it down to the hourly. Where's the 0.5? Well, it's here's, if we close over here, now I have an invalidation. So that's what I was talking about in my chat there. Let's see. What makes you choose a lower time frame CSD entry versus OB retest for the entry? It just kind of depends on what's happening. So for instance, let's say we close like this, right? And I'm just looking to get long. I'm guessing your question is, do I market enter here? Or if I'm waiting for the retest, like how do I decide that? And it really depends. Let's say we closed up here, right? Like that doesn't really make sense to market enter with my stop loss, right? In terms of risk to reward. That's when it makes more sense to use the retest. But if I'm using an entry right here, I'm not really going to be greedy for that amount of distance. I'd rather just be in the position, right? So you can see it either would have worked, but I'd rather just be in it, right? So if that's like an example, that's just more so what you prefer in experience. Took a loss on the fractal model, 4 hour 15 on Euro USD, 1 hour before new day open, didn't use daily bias, so you recommend. I truly think that you want to have, oh nice, I'll be watching Euro for upside tomorrow, most likely. So when we formed this swing high, I pointed out these opposing candles, but it's like I was going to say, it's always important just to know which way the trend is going. So with that, I like to focus on the last 3 to 5 days, right? This trend is still down, right? So if I'm on the 4 hour, I still want to be using that, right? So if I'm taking a 4 hour swing here, I still want to be aligning myself with that trend. Another thing you can do with the 4 hour is combine yourself with the weekly time frame, right? So weekly, if we look at this closure, what did it say to do early into this week? Candle 2 closure, looking for shorts in candle 3. Do we have a change in the state of delivery here on the 4 hour? Somewhat messy, and I think it's cleaner on forex.com, so can use that. So once we change that, we're in the new week here. We sweep out a high. We have a candle 2 closure. Okay, candle 3, candle 4, right? Here, what I don't really like about shorts in here is what I talked about was, remember that V shape I was talking about? And then staying out of like the expansions, or not expansions, let me rephrase this. Staying out of, trying to think of how to phrase this. I'll have to find AM's old video, or he made a little photo on this, but what I would rather trade is something like this, right? And I don't know where you took your entry, but I would rather trade something like this down, right? Versus trying to trade this retest, right? Why? Well, price is already moving down here, so I'd rather just hop in. Here, I'm trying to time this reversal here, which is not what I prefer to do, right? So it's a lot easier to trade this than it is to trade that. And you can see here, what I noticed this morning was when we got this aggressive move down, if we're going to retrace, we don't really want to see fair value gaps or this being bought up strong, right? We just want a nice little retracement into a previous range to then go lower. So I'm not really sure where your entry was. But I mean, if you put it in trade review, I can try to help out there. Before the new day open. I don't know if you're talking about midnight or what. I don't use that. But in terms of 4 hour swing points in here, I don't see any before that area to try to short. Unless you're meaning in here. If you can't hear, try. And then I think what I'll do is I'll just plan on doing Google Meet or something for the next time so there's no audio issues. Example. Okay, yeah, so let me put this in chat here. Or not in chat, but in this. So when to use change in state delivery or retest, right? So visual order, bring to front. So in an example like this, right? If I'm already gonna have my stop on this low, and it's what, you know, a few ticks from there, why wouldn't I just enter here, be in the position with my stop on the low, instead of being almost greedy for like a perfect fill right there, right? And risk just leaving it behind. So like in this case, yeah, when we open the new candle, it's like I would just enter, because my stop's going to be the same spot. I'm losing what, maybe like 0.3 R or something by doing that. Maybe I'll take a contract off or so, depending on my position sizing. But I'd rather just be in this position. And that kind of comes down to experience, but I preferred to just mark it in. Let's see. It's best to wait for the 4 hour 9 to 10. So there's lots of ways you can do it. If you look at Kinvestico, that all he trades is, get rid of this. All he does is he goes on ES and NQ here on the 4 hour. What he looks for is a swing point. Wow, there's a lot on there. He just looks for a swing point there that lines up with the 10 a.m. or after that, right? So yesterday you have this candle 2 closure, so then bullish for this time period, right? So you can do that. You can also just identify the trend and then looking for hourly swing points, right? So obviously today is just a drop, so you're not really going to get those hourly swing points, because most of the time in a very heavy trend, you never even come up to these highs. But what I would say is kind of backtest and see what works for you. You can use the 10 a.m. or the candle right before 10 a.m. That will set up a lot, right? So you can see a little swing point here that gives bias. I personally just prefer the hour because of how it aligns with the daily candle. Do you trade every market or just indices? Indices, oil, gold. I don't really trade Forex. Could if I wanted to, but it's not my cup of tea. I'll add to my positions on one shot, one kill, yeah. It's the same way. Have fun at Top Golf. Let's see. When do you trade, or 8:30 open to ride out to open? So your question here on 8:30, 9:30, my YouTube video in 5 days will actually cover this. But if 8:30 has the manipulation prior, then I will look to trade that because then 9:30 is going to distribute that, right? But if 8:30 lacks any of that, then 9:30 is going to be that manipulation, part of that distribution, and then 10 a.m. is going to distribute. If you gotta add videos to your course of you backtesting data with, I can do that, but the one thing with backtesting, like I said, is it's kind of a personal thing, because the way you enter a trade is not going to be the same way I view something, not all the time, right? If you take a look at Ian examples, like he sees it just about exactly the same, and so I try to make it as mechanical, but you need to see and learn that way. Watching me backtest is not really going to help a lot, because when you watch someone else backtest, you'll be like, oh yeah, I would see the same thing, I would do the same thing, I would do this. But when you actually backtest, would you? And so that's why I think it's important to do it yourself. USDJPY H4 15. Yeah, let's go over it. Let me pull over here. USDJPY. Do you have a choice on broker you prefer? Let me see. Let's see. I'm just waiting for the broker question. Anyone? All right, cool. So you're saying the 4 hour, and are you talking? You said what time? Let me pull this up. H4 at 1 a.m. So, oh, you're talking about this bullish one. Okay. Real quick, I'm going to go out to the daily chart just so I can actually see what's going on. Because if I remember, yen futures are very bullish. Yeah. So that's the one thing, is checking the daily chart, or you can check the currency futures, right? So if we went to, let's do this real quick, but if we go to 6J here, can see that yen very bullish right out of this swing and expanding out to these highs over here. So generally, if yen futures are bullish, and that's going to be, you know, if you pair something like this, right? I'm not going to be wanting to long something like that with that. I want to be shorting. But we'll go take a look at just the model and why it failed. So USDJPY. Because as you know, every model fails. So it's important to know that. So you're taking a look at this here, and we'll go walk through it. Oh, sorry, the replay's been a bit laggy here, so we'll look at it, but then right here we'll go to the 15. So here's the first thing I see, right? One, I don't really watch Forex a whole lot, but here is candle 2, and you can see candle 1 didn't make a very significant low, it's just that, but that's fine. What we want to see is if we're going to get a bullish reversal here, this is once again, I'm assuming you're talking about these equal highs up here. When I see a reversal, I want to see that nice V shape, right? So I want to see aggressive down, aggressive up. And what that does is it traps breakout shorts, then reverses on them, and they have to cover, right? But right here, so like if we're going to reverse here, I want to see a nice aggressive up and aggressive down. The next thing that I don't really like here is, yes, this is the series here. But if you're taking a look at this actual leg where we form a swing high, it's up here, right? So on a slightly higher time frame, if we even go to the 30, these little candles in here are just going to disappear, and our big series is going to be all the way up here, right? So if we go something like a 30-minute, see that? So those are the two little indications where it's like, okay, but let's see. And then as we play this ahead, this is a 15-minute, we'd want to see a nice candle closure. What do we notice here? We notice that we're closing below an opposing candle here. That's bearish, but let's see. Okay, can't close below. Cool, so that's bullish, but we still want to see this close over here. And you can see, right, we're not really getting that displacement back up. To me, this is just consolidation at this point, right? So you see how we don't get any V shape here? It's just consolidation. So when we go and take out this high here, yes, we do close over here. But what is this if it's consolidation now? We're taking out the high of the range, right? But even with that, let's say mechanically, the one thing we'll notice is we have a wick down here, and this is actually a great learning lesson on, because this doesn't have a very large wick and we close higher up, that's when I generally want to see the whole candle, right? Because let's walk through this. If price is going to expand higher, we don't really want to see it move all the way down here, right? Because that's more bearish. If price is going to expand, we just want to see it move, right? So it makes more sense on wick candles when price is closing near here for it to just do that, right, into the wick. But here, if it was going to reach this wick, that's pretty bearish. Hopefully that makes sense. So as we're watching this, if we're going to form a swing, ideally we'd do it right in here, right? Or you can use, 0.5 of this. It's kind of messy in here, that's what I'm saying, but 0.5 of this, and then we'd close over this, right? So the one thing I would consider is if we do that, this would be the setup, something like this, right? So let's see. You can see if I'm waiting for that change in the state of delivery within this candle 3, I would have never been into something. And now the fact that it took a new low, this means what? Now this is not candle 2 anymore. This is now, if I'm bullish, this is candle 2. Does that make sense? Hopefully that made a little bit of sense there. Do I execute trades off TradingView? Yes, I do. I use NinjaTrader, which I can use Trade8 with it, and then I have the add-on to TradingView. All right. hopefully that made sense. I tried to give you the few things that kind of, you know, give you the clue, but the main filter that keeps you out of this mechanically is waiting for a order block formation within this candle 3, which is what I will be talking about in my course editions this week. Okay, let me see live stream questions. Do you always recommend taking partials at 2R or for the cover? Like, is it more profitable to leave runners just to, that kind of depends on your own personal data and the setup. For something like where I have a lot of, you know, narrative going into it, we'll just use gold as an example today. Like if I'm long in here and I have the narrative on gold to just continue to this expansion we had marked out, that's where I might leave a runner, right? You can see I had from there to there. Like this is where it makes sense if I'm long in here to, you know, take my partial over these old highs and then leaving a runner, right? Versus if I'm trying to, you know, scalp something counter trend, it makes a lot more sense. Like for example, let's say I'm trading this hourly swing point here, right there, closes inside, I'm trading this short. That's where it makes sense to, you know, take off my full profit, you know, like here, right? So looking here, have the little change in state of delivery, once again kind of sloppy in here, but just as an example, let's say I'm short somewhere in here, right? It makes more sense to me to take off everything at 2R here than to try to just leave runners, right? Because my actual narrative isn't to go take out lows, right? My higher time frame is telling me where that a run of this low is actually where I'm going to be looking for long opportunities. So it depends on context. Like it's not set in stone every time. This I would rather take off all at this low or 2R, or at the 2 to 2.5 from this high, versus something long in here where it fits my higher time frame narrative, you know, candle 3 or candle 4 on the higher time frame and trading with that. All those align. That's when it makes sense to, you know, let my position run a little more. Hopefully that helps. That's kind of something you have to figure out for yourself and what works with your data, which is also why, you know, if you go take a look at the Circle platform and the Notion template I dropped, I grabbed someone's that they put in the resources of mine, adjusted it all to fit the model. Start filling that out with you back testing. Start filling it out when you're forward testing. Start filling it out. Gather data and figure out what works best for you, because you're not going to be able to know that unless you actually grab stuff on that. Grab data on that. That's what I mean. So I think we're a little over an hour here. So if you guys have any other questions, we can get to those. But if you haven't already, please go check out the flowchart, right? So go check the model. It's section 23. I just added it today. Shout out to AM for helping with the graphic design. But go check that out, because that's where I think I saw a lot of people struggling, where they're not waiting for the actual candle closures. And so that's why I was wanting to make that flowchart where it's your step 1 is waiting for the candle closures. Stop trying to go down to the lower time frames without those candle closures. As for the Notion, in the course I added stuff. Yes, I added one section for the flowchart, and then I will be adding another 2 sections later this week. The Notion template is in the announcement section on the Circle platform, and then the flowchart's in the course section. But as for the Notion, I think it's fairly self-explanatory. I don't have it up on my computer right now, and I don't know what I'm all logged into, and I'm not trying to like dox myself right now. But within the Notion, it's pretty self-explanatory. You just hit new entry, and then you'll have your, wait, let's see, I can pull it up on my phone and walk through it real quick. So you'll have your, what I have on there is, you know, your date and time, where if you just click in, you just choose the calendar. What market you're trading, you can add stuff into these. Account, kill zone. Kill zone I actually adjusted to hourly and half-hour increments, because that's how I wanted to gather some data. And then what setup, so higher time frames, candle closure. What's the point of interest? What entry candle? So we can kind of walk through it really quick. So for instance, on gold here, right? This is a candle 2 closure, right? But technically, since we didn't have the change in the state of delivery, it's a candle 3 closure, right? So with this, I would say, okay, candle 3 closure to trade the upside, right? What is my entry candle? That's candle 4. What is my entry technique? Well, that's depending on where, you know, got long. So order block, right? Or order block retest. Do I have an intra-candle change in the state of delivery? And what I mean by that is, okay, if I'm entering long on the hourly here, do I already have an opposing candle formation in this? So yes. What's my entry time frame? An hour. Daily profile. In this case, it's just not very applicable because made this low. On the hourly, it's not a huge deal for me. What did I use to enter? Market or limit? What's my target? What's my risk? All that. And then you can go in there and fill that out. If you have questions on that, you can just shoot me a text in the Discord. But I think it's fairly self-explanatory. But that should help you gather data. I already know what most people's data is going to say, and we can go over that another time. But the thing is, I can tell people stuff, but it doesn't really resonate until you actually, you know, gather that data for yourself and figure that out for yourself. So I think that is all for today. Thanks everyone for joining. And if you didn't happen to join in, I hope you enjoyed the recording. Once again, I'll see you guys next week. And if you have any questions, as always, tag me whenever you want in the Discord, and I'll get back to you when I can.